Hello and welcome to the look ahead for Wednesday, the 1st of May, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, first up in the European session, UK manufacturing PMI data will be released. This is the final version of the April reading. Then from the US session, we've got ISM manufacturing, ADP payrolls, JOLT job openings, followed by the Federal Reserve interest rate decision. Earnings from MasterCard, Pfizer, and GlaxoSmithKline will be in focus. So the main event will be the Federal Reserve's interest rate decision. No change to monetary policy is expected. Interest rates are expected to remain at the 5.25 to 5.5%. However, the market will be watching the tone of the central bank very closely after we've had stronger than expected, hotter than expected inflation across the first quarter of this year. So there is an expectation that the Federal Reserve could adopt a more hawkish tone, causing the markets to push back further on rate cut expectations. Now, at the moment, the market's expecting is pricing in the Federal Reserve to cut 36 basis points worth of rate cuts this year. That's down considerably from around 150 basis points at the start of the year. And that actually equates to just one full 25 basis point cut. First cut looking like it could be September, could be later, potentially even to November. Just as far as the markets are concerned and what this all means, let's just have a look here at gold. Now we can see here gold's got very jittery just ahead of the interest rate decision tomorrow. We can see that today's candle, a bearish engulfing candle, it's just testing the 22.95 level at the moment, which is a pretty key level. I mean, if we get a breakthrough here, then we could actually see gold drop right down to 22.22. That's where the next serious level of support lies. There could be some minor support around the 22.70 level. Now, it'll be really interesting to see whether this level holds. If this level does hold, and I mean, if we think about where we are, gold has had a very strong rally across April. It's still up around 3%. The gold's had a couple of strong months of performance. So there are plenty of traders there who are happy to book profits right now, don't need to sit through the Federal Reserve rate decision to see what happens to gold, which is probably partly to explain the sell-off that we're seeing. On the upside, if we do find that 22.95 level holds, then be looking for 23.50 as a level on the upside in order to bring the 2400 back into focus. So let's also just take a look at the US dollar. The other thing to bear in mind here is we've also got plenty of US economic data. So we could see quite a lot of, volatility, not necessarily during the day, but potentially. But this data comes ahead of Friday's non-farm payrolls. We've got the US manufacturing ISM, which is expected to show that activity actually stalled at that 50 level in April. That's down from 50.3. Again, as far as the the ADP payrolls are concerned, we're expecting to see relatively strong numbers there at 179K. That's just down slightly from the 184K previously. And also JOLTS jobs openings, again, just a very slight weakening to 8.68 million, down from 8.75 million. Now here we've got the dollar index chart. Now we can see that sort of sitting between, we've got that low on the downside at the 105 level. On the top side, we've got the 106.50 level. It's trading just above halfway between those two levels. Now we've seen a strong rise today. I mean, I think as far as sort of near-term supports concerned, then 106.20, that's the weekly high. If we can get a little bit of a move above 106.20, then that really does bring that 106.50 level in. A rise above 106.50 creates a new higher high. It could be quite a tough nut to crack. On the downside, look for support at the 105.40. That's last week's low. And below there, the 105 level comes into play. Just finally, we talked that we do also have data from the UK. Now we've got some UK manufacturing PMI. It is, as I said, the final reading, so it doesn't tend to be as market moving as the preliminary reading. Expected to confirm that the manufacturing sector fell back into contraction in April at 58.7, down from 50.3. Now we've just got up here the sterling US dollar chart. We've seen sterling's really run into resistance. It's extended that recovery from the April low, but it's run into resistance at the 200 SMA, and that's at the 125.60. Now, if we can get a move above that 200 SMI, the 125.60, which is also the weekly high, then that's going to bring the 100 SMA into focus, which is around the 126.50 level. And above there, we get the April high at 127. Failure to rise above the 200 SMA could see bears keep control and push the price back down to test the 125.60 level, 125 level, and below that 124 comes into focus. I hope you like what you've seen. If you do, then please do give this video a like, and if you would like to receive more videos like this, then please do follow to subscribe.